What could 30 minutes with crypto billionaires the Winklevoss Twins do for your crypto wallet? You probably heard about the Winklevoss Twins because of the film The Social Network over their dispute with Mark Zuckerberg over Facebook. But if you are a sports enthusiast, then you possibly know that they took 6th place in the 2008 Beijing Olympics as a part of the men's pairs rowing event. But they are far more than that. They have founded a company named after them, Winklevoss Capital. It provides angel investments to early-stage companies and entrepreneurs. Currently, it has invested in almost 100 projects and has 20 crypto-focused investments in its portfolio. And in 2013, the twins revealed that they own around $11 million on Bitcoin through their company. Reports say that they bought some of their Bitcoin for as little as $10 per coin, and was rumored that they own 1% of all the Bitcoin in circulation. In 2015, Cameron and Tyler Winklevoss launched Gemini, a cryptocurrency exchange that enables users to buy, sell, and trade different cryptocurrencies, as well as securely store them. The price of Bitcoin peaked at over $18,000 in December 2017 and has risen and fallen since then, but the Winklevoss twins did not sell. Exclusive for our Crypto Clips members, we will find out how the Winklevoss twins can help you with your crypto wallet in this video, where we compiled some of their most inspiring tips and interviews. Don't forget that although knowledge is significant, to succeed in something of importance and value, you must take action. And now, let's get in on the video.
I know it might be hard to believe, but Tyler and Cameron Winklevoss, who the world got to know as the villains of the social network, who Mark Zuckerberg famously duped and turned their idea into one of the biggest companies in the world, might actually be at the forefront of a counterculture movement. Everybody was skeptical about the Bitcoin and cryptocurrency world for years. They were even more skeptical about Tyler and Cameron Winklevoss.
We were not financial experts when we came to Bitcoin early on. We bought a lot of crypto on Mt. Gox, which famously imploded, and very few people were believers who actually imagined where this could go. So we thought for this to go mainstream, for this technology revolution to really happen, we have to build reliable, safe, trusted infrastructure.
In 2014, they founded the Gemini cryptocurrency exchange.
It started with building a bridge into the future of money, and then more recently, a bridge into the future of art. We think art should be digital. NFTs solve the digital scarcity problem.
In 2019, they acquired Nifty Gateway, an exchange for NFTs, or non-fungible tokens, that are now taking the world by storm.
Quite frankly, as we move more and more closer to the metaverse, you'll want art in your online world.
I need to ask you, since you use it, if you could just please define it. What is the metaverse?
The metaverse is the recreation of the offline world in the online setting. I think a good example of the metaverse would be Fortnite, where people have signed in and they even have held concerts. In the early days, it was totally unclear whether people were actually going to move on to this platform. And we saw that with social networking. There's so much skepticism around, will people actually share their stuff online and do this? And of course, we know how that's gone. Today, data of a social network is owned by that company. And in the future, we believe it will be owned by the individual who provides that data, whether it's photos or content or whatever. They will own that content and it's theirs. And quite frankly, it is theirs rightfully. We believe that.
So our first investment was SumZero. It's a community of buy-side investment professionals. Our next one was Huckster, which is a tool that allows shoppers to track items for sales when they go on sale, and it alerts you by email or text. And our latest interest has been a lot in Bitcoin and BitInstant, which is a retail gateway to buy and sell Bitcoin.
Right, and yeah, so we had reported on the BitInstant startup, and I want to talk about that company in itself, but I also just want to talk about your interest in Bitcoin. You gave the keynote speech here at the annual Bitcoin conference in San Francisco, or in Silicon Valley, which is a huge deal. Winklevoss Capital owns approximately 1% of all outstanding Bitcoins, is that correct? Mm-hmm. So big bets here.
Yeah.
Can you just take me back to when you first found out about Bitcoin? What did you think of it? What was the introduction?
So last summer, Tyler and I were on vacation, and an individual who's a friend of a friend approached us and said, introduced himself, said hello, and then we started talking, and we had a bit of a conversation about digital currency. And then when we got back stateside, he sent some material over, and I started reading through it. And I looked at Tyler and I said, this is either completely made up and kind of a pie-in-the-sky idea, or there's something really big here. And then we started to dig in, and one thing led to the next, and we sort of were at a situation where, do we invest in the currency? Do we try and find a company in the ecosystem? And we sort of concluded that we wanted to do both.
Okay, and you bought this big stake in Bitcoin. How is that stake doing? How has the currency changed since the time you bought it?
So we started buying in the high single digits. So we've done, the price, actually I haven't looked at it today, but it's been hovering around 100, 110. So it's been a good gain so far. But we're still very bullish on Bitcoin. We think it's really early days, and I think that there's a really bright future ahead for it.
Some criticism about Bitcoin is that an investment in Bitcoin is almost like rooting against stability in the larger economic markets. Is this a bet that's saying, I'm betting that the dollar is going to crash, I'm betting that there's going to be political instability in the world, that you're finding solace in Bitcoin?
I feel like it's actually the opposite. It's sort of a healthy counterbalance to fiat currency. So without this alternative, there's no checks and balance on whether or not a country prints a lot of money. But if there is an alternative, then people can choose. And when there's choices, I think it generally makes things better. So it's going to help create a healthier fiat currency system. And I don't think one sort of kills the other. I think they live side by side.
I think the reality also is that there's inevitably going to be mismanagement. Countries are going to run into issues, and having an alternative or a place where people can store value in, I think, is better than not, and sort of pretending that that's not a reality, or that there's countries that don't have a currency or a central government. So I think it sort of fills a void, and it's going to hopefully be a great store for people that inevitably run into a situation like that.
What's the biggest challenge for the Bitcoin space in terms of it really getting, further into the triple digits or the
I think user-friendly. It's easier to convince someone about how cool Bitcoin is than it is to actually tell them how to get Bitcoin. And so it's kind of backwards. The positive use case scenarios have to increase, and the ability for people to use it easily, just like you might use PayPal or some other product, it has to be just as easy as anything else. So when that happens, I think we see Bitcoin continuing to grow.
It has to be easy for my mom to sign up and use it.
Right.
So I think in the last sort of run up when it peaked out at 260, whether you agree whether it's a bubble or rapid adoption, I think ironically the bubble wasn't even able to fully play out, if that's what you agree that it was, in the sense that the economy kind of choked on itself and sort of fell under its own weight. And so those situations where there aren't sort of choke points, where it's held back, those will be hopefully go away. And as Tyler was mentioning, it becomes much more user-friendly, where it's not a sort of a long conversation. Well, this is where you buy it, this is how you store it. And I think a lot of people are fearful of sort of storing digital money and the security aspects of that. But I think entrepreneurs are flooding into the space. Obviously, venture capital dollars are, and I think those problems are definitely fixable. Taking Bitcoin in isolation of, putting all the other assets aside, we believe Bitcoin disrupts gold. We think it's a better gold. If you look at the properties of money and what makes gold, scarcity, Bitcoin's actually fixed in supply. So it's better than scarce in gold. It's more portable, it's fungible, it's more, durable. It sort of equals or better gold across the board. So if you look at a $100 billion market cap today, now last week it might have been more like 200, but so it's actually a buying opportunity. We think that there's a potential appreciation of 30 to 40 times, because you look at the gold market today, it's a $7 trillion market. And so a lot of people are starting to see that, they recognize the store of value properties. So we think regardless of the price moves in the last few weeks, it's still a very underappreciated asset.
And Bitcoin's just the first cut. If Bitcoin's a better gold, imagine your financial system with only gold as an asset class. That's how sort of early in the beginning of this is. There's going to be a menu of many cryptocurrencies, and they're going to rethink the entire internet and how we sort of view it. You could never buy a piece of the internet back in the 90s. You couldn't buy the protocols. You could invest in a VC firm on Sand Hill Road that had to pick Amazon versus Pets.com. So you had to get lucky. You had to be very privileged and get lucky many times to get it. Now you can just buy a piece of the protocol. So buying Bitcoin is like a call option on the entire Bitcoin ecosystem. A Bitcoin company will not work out before Bitcoin works out itself first. So the ultimate Bitcoin bet is Bitcoin, or the ultimate Ethereum bet is Ether. And you're basically buying a piece of the racetrack, and you're not picking, Seabiscuit. Doesn't matter who wins as long as the races are running. You're a part of it, and that's the beauty here. And usually, the retail investors come in at the end. They get dumped this stuff post IPO, 10 years after a company was founded. Now retail has been the ones who have been there first. And actually Wall Street is completely asleep at the wheel and late to the game. Silicon Valley's actually completely missed it too. People in Silicon Valley and the companies have maybe personally got it. Some VCs have personally invested in coins, but they structurally were unable to invest, had to invest in C Corps. And so buying gold or buying Bitcoin is not something they do, but the partners were investing their own money. And Silicon Valley very much missed cryptocurrency because they want to miss it. It's not good for the centralized application layer, the FANG companies that sit on top of the internet. Cryptocurrencies actually decentralize that, pull it all down to the layer below, the protocol layer, and the value actually accrues to the people who buy into and use and build the network. Not one company, there's not a headquarters of Bitcoin or Ethereum. These are networks that are decentralized and owned by, in a very democratic way, the users of them.
So you have a company called Gemini. What does it do?
It's a Bitcoin spot exchange. Actually, it's a digital asset exchange for both Bitcoin, and as of last Thursday, we got approval from Governor Cuomo in the state of New York to add Ether, which is another digital asset cryptocurrency.
What does that mean? Not just adding Ether, we'll get to that in a moment, but being a licensed, regulated company.
Sure. It means our compliance, our capital requirements are similar to a bank. So we look and feel, and we have to go through the same procedures that your bank does. So it means we're regulated and we're a safer, secure venue to buy and sell Bitcoin.
Does that mean, because people have accused cryptocurrencies of being a store for, or at least a hideout for, people who want to do things that run afoul of the law. Now that you're licensed and regulated, does that mean you'll share data on accounts and ownership with law enforcement?
So there's going to be situations like any money service business where law enforcement might compel you for certain reasons, but we don't do anything without actual, like a subpoena or something with legal enforcement.
Are there know your customer requirements that you have to comply with?
Absolutely. That's part of being regulated. We have a BSA, a Bank Secrecy Act, and anti-money laundering program that's been vetted by the New York Department of Financial Service, which is the highest bank regulator in the land in New York. So KYC, know your customer, is it's the principle, one of the core principles of our business, and it's spelled out in our user policy as well.
A number of people, bankers included, have talked about the promise of the blockchain technology.
Sure.
But they have, for the most part, distanced themselves from Bitcoin or Ether or other cryptocurrencies as a medium of exchange.
Right.
Can you disentangle one from the other, or are they the same thing?
We think that the open blockchain is very different than some of these bank chains. It's similar to how the internet is what we think the Bitcoin blockchain is like, and versus AOL or CompuServe. That's not really the open internet. It has some value, and I think it will improve the banks and how they settle and whatnot. But we're really not competing for that, and it's a very different space.
How so? It is the things that people will use the blockchain or the Ethereum blockchain to build will be different from, call it, bank-provided services. Right. How exactly?
Well, they're open, so anyone can build on it, just like anyone can build on the internet. You may not be able to build or want to build on JP Morgan's blockchain, They may not be transparent. They may be, there's just different, they're private, right? And so you don't know what's going on in there versus an open blockchain. If I send you something on the Bitcoin blockchain, if I send you a Bitcoin, the whole world sees that happen.
Why is there this idea that computers need to talk to each other effectively using a cryptocurrency or transact with each other using a cryptocurrency when on securities exchanges around the world there are all kinds of computer-driven trading strategies that transact in multiple currencies that we know and use every day?
Listen, I think that we're seeing the future of autonomous actors and agents, like self-driving cars and things like that. And you cannot bank a machine, right? A machine can't go to Wells Fargo and get a bank account, but they can get a Bitcoin address and transact as rational economic actors. And those trades are not settling. So when you buy your share of Apple, it settles in 3 days. A Bitcoin settles at the atomistic level when you actually
almost
send it
instantaneously.
Right, and the same thing with Ether. So when you're dealing when you're buying a cup of coffee or hiring a self-driving car, you can't wait for 3 days for that car to pick you up, or 3 days at Starbucks. That coffee's going to get pretty cold.
Why do you guys describe Ethereum or Bitcoin as tokens, really as options, call options on this technology?
Yeah, so basically the token Ether is used on the Ethereum network. Bitcoin is a token or asset that can be used in the Bitcoin network. If you believe these networks are going to grow and there's going to be lots of demand for them and the space is going to grow, you can, by buying a token or a piece of those, you can effectively bet on the future of the value of the network. So you're investing, it's like indexing the entire Bitcoin ecosystem or the entire Ethereum ecosystem. Gemini is the only exchange in the world, the first and only, that's actually licensed to buy both Bitcoin or Ether. And so if you want to do it in a license compliant manner, then we're the place to go. Like the internet, for example, you couldn't, or in the early days, really buy a piece of the internet. You can buy a piece of Bitcoin by buying Bitcoin, or a piece of Ethereum by buying Ether on Gemini.
To take it back, when did you first get involved with Bitcoin?
So we were on vacation in Ibiza. We were at a day beach party, a club called Blue Marlin. Some guy came up to us, he recognized us. We had mutual friends in common in New York. And he's like, have you thought about Bitcoin? And we're like, what's Bitcoin? And we had just been, athletes since 15 to 30. So we had just retired. We had just opened up our family office, Winklevoss Capital, just got a lease space in New York. So we were going to do angel investing, but we were on vacation in Ibiza. Like, there's not a lot of startup ideas that happen there. But I guess that's how these things work. You know, it's sort of like you can't force finding love or finding your passion. You just have to be aware. Anyway, chance encounter on a beach in Ibiza. We stayed in touch with this guy. We got in contact when we got back to New York. He really wanted us to look at this investment called BitInstant, which helped people buy Bitcoin. But to understand whether this company was worthwhile investing, we had to understand what the heck Bitcoin was. So that was in the summer of 2012, and Bitcoin was in the high single digits. So we started buying Bitcoin. We initially were like, this is either a really big deal or it's just total bullshit.
Yeah.
And then we came around we started asking questions, which a lot of people don't do. They just write Bitcoin off. So we started asking Bitcoiners, the hard questions, and the answers were great. We always got good answers back. So we came from, we came in the side of like, this is a huge idea. This is Gold 2.0, built for the internet. So we started buying at about $8 a Bitcoin. So that was back in 2012. Fast forward 8 years now, and Bitcoin is trading anywhere at like $18,000 a coin.
Yep. And I know it's just coming to that all-time high number. And I wanted to ask you, how is 2020 different than what Bitcoin was in 2017, with it being, crossing the all-time high mark?
Yeah, so it's very different. So much has happened in 3 years. Gemini is an exchange custodian that we built. We launched in 2015. It helps you buy, sell, and store cryptos like Bitcoin. Yep. Just from that vantage point, our company has grown so much. We're almost 330 employees.
Wow.
But there's been so many efforts in the space. But this bull run is being led very differently. There's some really legendary investors. For those of you who don't know, Google guys like Paul Tudor Jones, Stan Druckenmiller, these are hedge fund legends. They're taking positions in Bitcoin. They're talking about it. They're going on CNBC. We have publicly traded companies that are putting some of their treasury reserves, their cash on their balance sheet into Bitcoin because they're worried about the oncoming inflation for cash. So public companies like MicroStrategy, Jack Dorsey's Square, have taken huge positions of Bitcoin. So it's really being led quietly in a way by the most sophisticated investors in the room and really sophisticated publicly traded companies. So it's not the FOMO crowd, it's not the retail crowd, they're still there, but the hype, the overhype of 2017 doesn't feel like it's there. And what these people are seeing and believing, and I've spoken to many of them, is that Bitcoin is gold 2.0, right? Yep. And so it is your protection from inflation. And inflation's happening much because of all the stimulus spending, all the money printing that the US government, other governments around the world have resorted to help get economies out of the lockdown, the pandemic, but really the lockdown and the economic demand shock that's happened. So nobody's buying stuff, nobody's spending, you can't go to a restaurant. So governments are trying, central banks are trying to pump money into the system to keep it afloat, to plug this hole. But what happens is that the dollar supply keeps increasing, the euros, the pounds, whatever. So your dollar used to be a certain percentage of all the dollars in circulation. And now that percentage is a lot lower. And so prices are going up. That's the result of inflation. When you print more money at a faster rate than the economy grows, which means all of your dollars can purchase less. Yep. So when you put your values in a dollar, it is actually degrading over time. It's sort of, I think I said this on another podcast, Bryce's podcast, if you have 10 apples and there's 100 apples in total, you've got 10% of the apple supply. Yep. All of a sudden you double that to 200 apples, you have 5% of the apples. So it's just less rare. And so the dollar is becoming, I sort of joke, but it's sort of turning into toilet paper.
Yeah.
It's going to depreciate, right? But so what people realize is to protect from that depreciation, they put their value into hard money assets with much tighter money supplies like gold. But gold is actually scarce. The supply is unknown and people find ways to mine more, over time. Whereas Bitcoin supply is fixed at 21 million. And that is a really important characteristic because we know how the supply of Bitcoin's fixed. There's no technological breakthrough that can increase that. So when you buy a Bitcoin, and you can buy $100 of Bitcoin, you can buy any fraction, it's always the same percentage of the entire pie. And in the backdrop of the pandemic, the lockdown, the money printing, there's a term in economics called helicopter money. Everyone in the US got a $1,200 check that just literally came out of thin air. The way to, and people are like scratching that, like people are starting to get it, how is it happening? It's actually like the Federal Reserve, waves a magic wand and it happens, and people are sort of saying that feels a little bit like not real because it's not, and that, I think that's why Bitcoin, it's been a catalyst driver for Bitcoin lately.
I think we just enjoy the struggle and the challenge of building and creating. To us, sitting around and kind of just like, not building towards something, not, achieving something, not growing as a person seems sort of like boring and you're checked out. And I get that maybe when you're like 75. But right now, I think it's incumbent upon you as a person to, really try and tap into like how great you can be. I don't know, I think it's part of your duty to do that and also, give back at the same time, like leave the world or leave something better off than it was before you got there. I'm Tyler.
And I'm Cameron.
And we're the Winklevoss Twins.
I think the easiest way to think about Bitcoin is
internet money, or money purpose-built to be able to send value over the internet. If you think of the way that we currently pay for things or send payments through the internet, we use credit cards and things like ACH, and those are inventions that predate the internet by many, many decades. And fitting them onto the internet is really like putting a square peg in a round hole. If you think of the way we used to make phone calls via landlines, and then voice over IP, or it was developed as a voice protocol, and applications like Skype were then built on top of it, and our voice now goes through the internet in data packets. Bitcoin is similar in concept to taking money and creating effectively value packets that now go through the internet. With respect to skeptics, I think that there's a lot of arguments and reasons why Bitcoin, I think, is the future, and cryptocurrencies as a whole. But I think the simplest way to sort of say it is that this is not an if, it was always a when. If there was an ability to build a money protocol in the early days of the internet, it would have been added. The only reason it wasn't added is because the technological or computer science breakthrough had not happened in those early days. It took until 2009 when Satoshi Nakamoto effectively created the consensus system of Bitcoin and solving the Byzantine generals problem, at which point now Bitcoin is part of the internet and a protocol that is viable. And I think that if you sort of step back and look at the way everything is moved from sort of the physical into the digital, when you think of music, we've gone from vinyl records to CDs, and then now digital ones and zeros in a digital format. This was always going to happen, and I think eventually you will view cash and the dollar bills in your wallet, if you still have any. Your wallet's probably mostly plastic at this point. You will view it as a vinyl record and a thing of the past that probably only hipsters will use in the future. The fact that we're twins and we're best friends has been a huge asset. We've definitely always used it to our advantage. It's obviously not always easy getting along all the time, but we've managed to do it, and it's been a great. We've made a great team, both in sports during a rowing career, and now we really enjoy working together in business. And I think trusting your partners is something that's super important, and we have that built in because we're twins. And if I do something wrong to him, then it's pretty much like doing it to myself. So it's been a great asset, and we've tried to make the best of it. I think one of the things that helps is, even though on paper and on first glance we might look and appear like the same exact person, we have much different, I think, personalities. And given the fact that I'm left-handed and he's right-handed, we generally approach problems and different things from different angles. So there's, I think, a healthy discourse and back and forth. So we're not sitting around sort of ratifying each other. We're actually having constant dialogue and different opinions. I think that's what makes it exciting, but also working so that we don't get bored of each other.
Wasn't that amazing? From lawsuits to holding tight, the twins have become self-made billionaires. What did you think of the clips we have shown? Have you been inspired to start investing in Bitcoin too and become a self-made billionaire? Do you agree that Bitcoin is moving in as gold 2.0 and will probably disrupt gold? Let us know in the comments below, and share with us which advice are you going to follow starting today to fill your crypto wallet. There you have our crypto clip video for today. Don't forget to subscribe to our channel, click the notification bell, and like this video. If you think that we have delivered value, please share this video with one person. Just one share is enough for you to show your appreciation for the commitment and hard work we all put together in creating this video that teaches and helps you on your mission of building your own fortune. And you don't know that one share could go a long way. And keep in mind that no matter how many times you're going to watch this video, you won't see any results unless you take action. Goodbye, and see you at the next one.